Welcome back to another episode of Sunday Stock Talks, the place where we go over the analysis of major market indexes and where we also go over economic data that has the potential to move the market. So if you want to know the top things to watch out for this upcoming week, make sure you watch all the way through. Welcome back to another video. As always, if you enjoyed the content, make sure to leave a like and subscribe. So first things first, we're going to start off by going over the analysis of SPY, and the futures opened around 5 hours ago because right now it's 10 o'clock, and the futures actually opened down by a lot. I checked the Dow Jones and it was actually down 400 points last time I checked, but right now we're looking at the SPY, which is also down. We can see that on Friday it ended up closing at a price of 304.21, and right now it's hovering right around just below 301 area, so definitely down. So we're definitely looking at a red opening on Monday morning within a couple hours, around 12 hours from now. So we went ahead and what I did was reorganize the support and resistance lines on SPY, because if you guys remember last time I made this episode, the price action of SPY was significantly higher. So we went ahead and drew the new support and resistance lines. And this first line right here is right around the 298 area. And we can see that on Friday and also pre-market right now on Sunday, it multiple times within this time frame it actually bounced down to this 298 area. It didn't exactly get all the way down to 298 area, but it reached with a range within that area where we could identify it as a resistance or as a support as of right now. And so right now, just looking at this, multiple times it actually went down below the 200-day SMA line. And if you guys remember from the previous videos that I made, I said that as long as it was able to maintain above that 200-day SMA line, I was bullish. But now, because it's actually broken down multiple times, we can see it actually broke down on Thursday, and once again it broke down on Friday. That's starting to show some signs of bearish territory, and especially because it's getting closer and closer to this 298 support area. And so if it breaks that 298 support area, what the possible price action of SPY to follow is the next support that I drew, and the next support is actually quite below that. It's almost $10 difference. It's right around the 291 area. So there's this really big gap that SPY has to fill, and honestly, because of all the tension that keeps on rising right now, I wouldn't be surprised if within this next week SPY tested the area of 291. Because there's a lot going on, which I'll go into a little bit of detail later on in the video. But that's pretty much it for the analysis. Like I said, right now, currently bearish, especially because SPY was able to cross under the 200-day SMA line, and right now it's looking like it's trying to hover above that. But come Monday morning, if the sell-off continues, I definitely see it crossing under the 200-day SMA line again and potentially breaking through this support of 298 area. And so if that does happen, it's going to head lower, possibly trying to form some type of support before reaching the 291 area. So hopefully it does form some support right around here. If not, we could definitely see a test of the 291 area. So has a good opportunity to buy some puts if you are trading some options. So now we're going to go ahead and go over the analysis of the economic data that will be released in the upcoming week. So the first major economic news data that will be released this upcoming week is on Tuesday, and that is the retail sales at 8:30 Eastern time. And so basically what the retail sales do is it tracks consumer spending, and so ideally we'd like to make money, and that means that they have more to spend. If this number is for some reason lower than the expected value, then this is going to be a bearish indicative, because that means that people are not spending, so they're fearful for their money and they're saving more money instead of putting it back into the economy. So the next important economic data is the initial jobless claims, and those are going to be released on Thursday at 8:30 as well. And what they measure is how many new people are filing for unemployment. And so we should see this number slowly continue to decrease because the economy continues to slowly reopen again. And jobs are a strong driving force of a good economy. So if for some reason the actual number is less than 1.5 million, which is what the forecast is for this Thursday, then that's probably going to instill fear into investors and might cause the market to downtrend even more. Personally, I think that this number is going to be better, or if not at least 1.5 million, because going off from where I live, I continue to see more and more places open, and so that means that more and more people aren't going back to their jobs. But I mean, everyone can have their own opinion, but the actual number that's going to matter is the one that's released on Thursdays. So we're just going to have to wait and see what actually happens on Thursday morning. So the last thing I want to talk about is actually not an economic data, but more of something that's going to happen in Congress, and that is that the Federal Reserve's chairman, which is Jerome Powell, he's going to testify to Congress about the future of the United States economy. And so basically what I think is going to happen is he's just going to reiterate what he actually said earlier on last week, which is that, the economy is going to go through some turmoil, and it's going to be a little bit rough trying to basically dig ourselves back up from this hole that the COVID-19 pandemic left us in. But I think he's just going to reiterate how he expects the interest rates to remain relatively close to zero. That's probably going to affect banks more than anything, but I don't think it's going to have a huge effect because he already gave kind of his 2 cents of what the economy is going to go through earlier on last week. But, it's always good to kind of just check out what he says just in case something new does come out. It might end up affecting the market, but personally, I don't think it's going to affect the market too much. But that's pretty much it for this video. I hope you guys enjoyed, and I will see you guys in the next one.